Boy, did we cap off the week, Warriors. All right, so the main message in here was don't get FOMO and chase it, that there would be something counter trend. I'm the first to admit I didn't think it would happen in one day like this, but it certainly saved you a lot of aggravation if you had FOMO and you said, "Oh, I'm going to miss the whole dollar rally." In fact, next week we could have a test of the breakout. That's going to be the moment of truth here in the dollar. And I did talk about trading counter trend, and I bought the euro down here at about 14.13, and I booked the remainder here. So pretty good trade. You're talking about if you're still in it, there's 160 overnight. So good trade made up for some of the chop in the dollar index, and some of my counter trend trading earlier was definitely vindication. Back here, I said I think we'll have a chance to sell euro at 116 to 116.50. That looked like that was never going to happen till now, and now it looks like it's a very viable area that should run into some resistance. I also talked about the yen and the fact that this time it wasn't confirming compared to the prior two highs confirmed high, got us another high, confirmed high here, got us another high. The Virgin high gave us a sell off in the end. So you were warned, if you were still long yen, that we're not doing the same thing. The RSI structure was weaker than it was at the prior two highs, and here's the result. So we'll see. That's a pretty big break. That might be it for now in U.S. dollar yen. So why don't we move on to really where also there was an excellent payday. I had been shorting stock index futures, and I had two trades this week in S&Ps. I had this trade from 64.08 where I booked, 29 on partials. You could have had 60. And then yesterday during the broadcast, I showed that this high, the new high it made, which now looks just like a stop hunt, was glaring divergence, short from 64.26. It took some partials, about 40 handles yesterday. And right now, if you want it, you have 163 handles in S&Ps. And I started talking about NASDAQ that was going to lead it. It got a little bit through this 23.5. It did not diverge, but it's leading the way down. And targets for both of the stock indexes over the next several weeks. I'm going to be conservative at first, and let's look at the S&P. So here's the S&P daily. So markets will typically retrace back to a former high. And this was a big high, not just because we had a break, but we had a crash, right? So 61.40 or so. And then look at where the 50-day, this is there, the S&Ps. This is what I'm talking about. Back to 61.40. These were the highs here, 61.40 before we had the April crash. So 61.40 is a target. Coincidentally, you have a 50-day moving average coming in there as well. So that might be a decent place to take some profits and continue to sell rips. But I believe this correction is going to have even more in it. The 200-day comes in at 59.08. We might even break that. But I think 59.58, I think, is reasonable. That's about a 7% correction. And NASDAQ always outperforms on the up and the downsides. 10% is going to take it down to about 21,500. So we finally got a resolution in rates, and that's part of the reason. Well, it's a lot of the reason why the yen is selling off is because of what has happened to 10-year yields. It's pretty negative. They were tricky. It looked like you had a breakdown, then it rallied, and then here next support. And I talked about it earlier in the week that we could take out this 419 level and maybe trade down towards this next black line around 411. So also you might be having a flight to quality in the bonds. You normally you hear me bearish bonds, but I have not been bearish for several weeks. We have a gap up. I think it's going to take out this high, and then if we crack this 50-day moving average, this is a 200. In fact, the 200 comes in back at these highs. So we'll see how much bonds have during risk off. And what else did I want to cover? Oh, we're getting big rallies in the metals. I'm still not a believer that this is the end of the correction in gold. Maybe I'll be wrong, but yesterday I said we could rally back to 33.60 unless the dollar has run its course and revert back to that we're going to make one more low. Then I guess the gold could go. But really, what we're doing right here is maybe a little bit of a back test of the breakdown. Silver's rallying with it, but I don't think silver's ready yet. I have some very big support between 5.5 and 4.5 in the coming weeks. We'll see what happens there. And really, that's it. So the lesson yesterday was when you're trading off and you're out of step. Earlier in my career, I would just, stop trading. There's nothing wrong with that. But I said what I'm going to do so I don't lose the feel for the market was look at the word I have next to my laptop, which is next. It's always about next. And if I had just withdrawn from the market, I wouldn't have been there for the pop in the euro and really a huge move in the S&Ps. I can't remember the last time I pulled out 150 handles in the S&P. So I hope you guys were able to ride a few of these things with me. You have any comments or anything I haven't covered, like crypto, and you didn't have to be in a hurry to buy this. I've been saying for a while. Let's see what happens down around 112 next week, 110 to 112. There, Ethereum looks a little heavy too. Maybe we could get a pullback from about 36, 34, 32 would be ideal, but be nice to flush out the longs here. And let me look at Ripple before I let you go. And I do have a couple of other commodity markets that I want to talk to. China is really giving bad signals. I've been talking about this too, Baba. China looks lousy. It hasn't even approached the highs that we had last year. So China, I'm pretty negative on. And what was I going to talk about here to wrap it up? The copper's just been amazing. That's why free Freecorp as Freeport McMoran has taken it on the chin. I'm just looking for XRP, and then XRT. That's the oh, here we are. So Ripple looks corrective. Maybe we'll finish this correction off here. Let me look at the daily. And maybe I know Hendrik likes the altcoins even more than Bitcoin, that they're going to outperform. Yeah, look at this. There's higher numbers coming for this. So maybe this is just a flag here. Worst case I see is maybe 262. Things get ugly and people are just raising cash early next week. And the other two things I wanted to talk about was the corn. I know it sounds boring, but I've been watching this corn, and to me it looks like we're basing out here. So where are we? Back here. Okay, here's the corn. So look at this divergence. It's glaring. Look at this. Here's the last confirmed low, the 25th of June. So it's already a month of diverging. Can it go down one more time in liquidation? Yeah, but this looks like a bottom to me. And then the other commodity that looks like it may be trying to turn is nat gas. I haven't done anything with it yet, but I'm stalking it. Here's nat gas starting to diverge as well. Look at this on the 4 hour, pretty glaring. So I'm long a little bit of corn. I haven't pulled the trigger on nat gas yet, but I'm looking to do so. Maybe it'll be next week. So that's a wrap, everyone. Hope I covered everything that you guys wanted to talk about. I know that there's some people that also follow DAX. I kept pointing out that although we were making new all-time highs, the DAX wasn't, and it never did. And that was kind of a tell since it was the leader for the last 6 months making new highs while the S&Ps were not, that this was a little bit different change in tone. So no new highs here in the DAX since July 9th. So it's about 3-4 weeks while the S&Ps kept making successive after successive new highs. So that's a wrap, everyone. Hope you have a great weekend. Remember, don't just count your pips, count your blessings. Check out the room for posts and for Mike's stuff. And I'll see everyone Monday, God willing. Adios.